Assalamualaikum warahmatullahi wabarakatuh. My name is Reika Harfina binti Azramsyah.
norhaslinda Binti Adnan.
Farahany Farrisha binti Sukri.
Mr. Akkidd binti Abdul Razak, and I'm from the IA6C.
And today I will talk to you guys about the overview and also the difference between money and capital market. So, what is financial market? Based on Wall Street module, financial markets refer to the marketplace where there are activities related to the creation and selling of various financial assets such as bonds, securities, currencies, and derivatives, and also offer a medium for financial asset sellers and buyers to meet and exchange with each other. So now we have known what is financial market, right? Next, in this presentation, we can know about the function of financial market, which have 7 functions of financial market, and the difference between the market, such as money and capital market, primary and secondary market, and also spot and future market.
Function of financial market. What are the functions of financial market? Function of financial market have different functions that the financial market perform, which include the determination of the price, mobilization of the fund, providing an opportunity to different investors to buy or sell their respective financial instruments at fair value, providing the various type of information to trader, and the sharing of the risk. For the first one is price determination. The financial market performs the function of price discovery of the different financial instruments which are traded between the buyer and the seller on the financial market. The price at which the financial instruments trade in the financial market are determined by the market force, which is demand and supply. Next is fund mobilization. Fund mobilization is which or how the fund is allocated among the person who are in need or raise the fund through the means of issuing financial instrument in the financial market. And the last one of the financial market is easy access. What is easy access? This industry require the investor for raising the fund, and the investor require the industry for investing its money and earning the return from them. So, the financial market platform provide the potential buyer and seller easily, which help them in saving their time and money in finding potential buyer and seller.
So next is what the difference between money and capital market. One is the definition. I will tell to you guys about the definition first. The money market is a short-term lending system, which is the debt securities that will be repaid in the short term, usually within 1 year, while capital markets are the market for long-term debt and equity, which will be repaid more after 1 year. Next, type of instrument involved. Some of the instruments traded in the money market include deal in promissory notes, bills of exchange, commercial paper, T-bills, and call money. For capital market is deal in equities, debentures, bonds, and preference share. Money market nature of market is informal. It is because it allows company with a temporary cash surplus to invest in short-term securities, while capital market nature of market is more formal. It is because the key source of the funds for the entity where securities are permitted by a regulatory authorities to be traded, since it can readily sell its debt and obligations and equity to investor. Besides that, liquidity of the money market is more liquid. It is because the instrument that's involved in this market which are highly liquid and can be redeemed in the period less than 1 year. While capital markets are comparatively less liquid, it is because capital market deals in medium to long-term time frame. Thus, the liquidity is less. Next is risk factor. As the market is liquid and the maturity is less than 1 year, the risk involved is low. It is for the money market, but not for the capital market. Due to the less liquid disposition and longer maturity, the probability is relative high risk. Last but not least, return on investment. The return in money market for money market are usually low because of lower duration of maturity period. But the return in capital market are high because of higher duration of the maturity period.
Okay, so today I would like to explain about spot market and also future market. So what is spot market? Spot market is the exchange of financial instruments settles immediately, while in the future market, participants buy and sell the contract for a delivery in a specific date in the future. Okay, so I would like to proceed with the financial instrument. Financial instruments for the spot markets are commodities, currencies, and also securities. For the future markets, the financial instruments are commodities, currencies, and also stock indexes. This is a few examples for this financial instrument. Okay, so next is trade settlement period. For the spot market, the allowable settlement period is 2 working days. That 2 working days is for the transfer of the cash from the buyer to the seller. In most cases, the spot market prices settles in near real time. Okay, so for the future market, the name itself is futures. So the underlying asset has a specific settlement date in the future. Okay, so I would like to proceed with counterparty risk. What is meant by counterparty? Okay, counterparty is the process where there is a buyer and also a seller for each transaction. The counterparty risk for the spot market is low, while for the future market is high. You guys might wondering why I say so. This is because in future market, the trade settles in the future. So the last thing we want to know is there is no one at the other side. For example, I am a buyer that involved in a future market, but then at the end, there is no real seller exists in my transaction. This could give me a negative impact for my transaction. Okay, so next is prices. There is a difference in prices between these two markets. A future price is higher compared to the spot price. The transaction in a spot market settles for an immediate delivery. That's why the spot price is lower than the future price. A commodity's future price is based on its current spot price plus with the cost of carry during the interim before the delivery. The cost of carry refers to the price of storage of the commodity, includes the interest and also the insurance as well as other incidental costs. Okay, last but not least, I would like to give you an example for each market. For the spot market, the example is the New York Stock Exchange. If you trade currency, then Forex is another large global spot market. For the future market, the example that I would like to give you is the Kuala Lumpur Composite Index. So I think that's all from me. Thank you.
Primary and secondary market are the markets that involve securities and shares. There are differences between primary and secondary market. In primary market, it only involves the company and the investors, while in secondary market, you can buy or sell securities and shares between investors. Next, new shares will be issued in primary market, while the shares in secondary market can be traded by investors, as primary market only involve the company and the investor. The shares should be bought directly from the issuer, while secondary market, the shareholders and the investors can buy or sell between them. On top of that, the prices in secondary market are fluctuate with demand, different from primary market, which the prices are set before an IPO, which is initial public offers, takes place. Last but not least, the objective of primary market held is to raise funds and to facilitate growth, as the money get from the investment will be used for the growth of company. While secondary market is to provide stability in prices of securities, which can help small investors out there. In conclusion, markets exist to help them save their money and also gain money. There are various types of financial markets which can be chosen by the buyer or investors to make some activities related to the creation and selling of various financial assets. Last but not least, financial markets are also the financial resources for all buyers or investors or the company to raise the capital or funds. That's all from us. Thank you.